Hello and welcome to Pro Trader Strategies Market Commentary. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. We did get French industrial production came in at negative 0.6, was expected to be a positive 0.2. And we also got construction spending out of Germany a little bit better than expected at unchanged basically, or 0% build, zero pullback, but it was expected to be a negative 1%. So that was better than expected there. The other thing was we have Fed Governor Rosengren speaking today, and we also had wholesale inventories was unchanged. But that is, neither here nor there. The wholesale inventories is a bit of a quirky economic data point that's not really very widely looked at all for various reasons. Anyway, the overall markets are all down today, so there's probably not a lot of happy campers out there other than me. I'm liking the market action today, but we have crude oil down $1.20 right now. I talked about this yesterday. That was after a big, huge build, and I think a lot of people started digging into those numbers after the initial euphoria of that drawdown and knowing that the storms in the Gulf Coast or in the Gulf region was what was really stifling that, and now that is going to be put into the inventories, it should, be a big build on the next economic data point that we get. Plus, we had the big weekend of driving for Labor Day, so a lot of people spending money on gas and drawing that down as well without having the production up and running really very well. So on to gold. Gold also down on the day, not a whole lot, but down $4. Still at 1337, right in that area, right up against the moving average. So that should act as support for the 50 days. Going to try and hold it up a little bit. And the 9-day simple moving average is right where it's at. On to NASDAQ. We got NASDAQ down this is the bonds. The bonds down over a point. I mean, almost 4 points of downward trajectory in the last 3 days, basically down a point and 20 ticks. So very close to almost 2 points earlier today. Just taking back a little bit right now as we speak. On to the NASDAQ down 62 points, let's call it. Big move down and breaking support, as you can see here. This was going to be acting as the support level right here. Somewhere right along in here would have been a support area, and we blasted through that and are pretty close to the lows of the day. E-mini S&Ps very similar, echoing what we are seeing across the overall equity markets. /ES down 27.5 points right now, and again very close to the lows of the day. As you can see, we just made new lows a couple of minutes ago in the last 15-minute bar, but just slightly off of that right now by about a point. So market giving up a lot of movement, and this is something really to note here because we had a gap down on the open, so that's only closed for about an hour, and to see a gap down like that is pretty bearish going forward, and the overall market just never looked back. People got a little nervous and started dumping their equities right away overnight. A couple of things that I've done. I got a big move here in Cisco today, down $1.70, let's say, and I had on an iron butterfly in there, and I did the September 45, 50, 55 iron butterfly in there, and I originally sold it for like $2, and I think it was 52 cents, something right around in there. And these butterflies, or iron butterflies especially, and butterflies also, the butterfly family I should say, are very long to get your money out. It takes a long time, I should say, to get your money out of any type of butterfly. Just the design of them takes quite a bit of time, and I did this back on like the 18th of August, so it's taken that long to start really seeing this decay. But with this big move today, a lot of it came out, which was quite nice for me, so that worked out really well. And with the iron butterfly, remember, it's the September contract, and I bought the 45 puts, and then I sold 50 puts and the 50 calls, and then bought the 55 calls to define that risk. So that's what makes up the iron butterfly. It is kind of like a iron condor. You can collect a little bit more premium for the iron butterfly, which is why I did it in this one. And it worked out quite nicely. It's one of the few stocks that had high implied volatility. Volatility actually continued to rise on me after I had initiated that strategy. So it took a little bit longer for it to really come out, but with today's move right down, you could probably even cover it a little bit better than what I did. I covered it when it was down about $1.50-ish, and it continues to slide as well. So I bought that back for $1.55, so made almost $1 on that strategy. And like I said yesterday, it wasn't looking that good, and today it really came in. As a matter of fact, I think yesterday it was a loser. Today it turned around to be a big winner. Then on to Lilly. Lilly had yesterday bumped up against the 50-day moving average, as you can see here, and the point of control, and started falling away from it. And because it gapped up like that, usually this technical pattern or this candle pattern, when it's in an all-time high, is a better scenario for it, for a bearish signal. But with that being the pop-up, I decided to take a little chance on this, and went into the October and sold the 82.5 calls in there for 59 cents. So just adding some short delta to that. The last few days I was adding a little bit of long deltas, but today went in there to decide to look for a couple of trades that I could add on to the short side. Now with this big move down, it's going to be a perfect scenario. There's going to be some stocks that really get beat up and a little bit overdone to the downside if we start seeing a bit of a sell-off here. So it's going to be a good time to start looking at adding some longs to our portfolio. And if you like to get long stocks and hold on to them, I'm going to show you a way that we can build a synthetic long stock position with a third or a quarter even of the buying power needed. So if we were going out to buy Lilly on this stock, if you wanted to buy 100 shares of Lilly, it would cost you, $7,900, a little over that, maybe even close to $7,950 with all your fees and everything. And I'm going to show you a way to build this with using options where we can do it for maybe $2,500, and it's going to act the same way, and our risk profile is going to be exact. So check that out. Go to protraderstrategies.com, sign up for that. Should be a good one. And if you can't take that, take it easy.